Hi traders, this is Senior Account Manager Adam Howes hosting the Daily European Open webinar for this Wednesday, the 13th of the 9th, 2017. Thanks for bearing with us, just a little bit late on the start there, just due to a technical error, but we're good to go. Just a short general advice warning before we begin. Forex trading involves trading risk capital. The following education session is not to be treated as personal advice. Forex CT provides general advice only that does not take into account your personal needs or circumstances. Okay, so we'll take a quick look at the economic events, the recent ones that have happened over the last 24 hours and what's expected to sort of occur for the rest of the week. Now, we had a really big move on the pound last night on the core consumer price index and the consumer price index for August year on year. We expected 2.8 and 2.5% respectively, and we came in at 2.9% and 2.7%, suggesting that prices are rising, the purchasing power of the pound diminishing, so across a basket of goods. So when we look at such announcements, if you're wondering how, CPI, how does it actually move a currency? Why does the price actually go up on such an announcement when there's higher than inflation? Well, generally speaking, the main driver of currency strength or weakness is indeed interest rates. If we have prices rising or any indication that prices are rising in an economy, that places further pressure on that respective government to raise rates to combat inflation to keep it in check. If there's an expectation to raise interest rates, then of course that attaches a high rate of value to that currency. So that obviously gives international investors some confidence in the pound having actually maybe the bank may think about raising rates from historically record lows of 0.25%, in order to combat high inflation. But we do have indeed the rate decision coming up. It's a quiet day on the market today in terms of announcements, but we do have the Bank of England rate decision coming up tomorrow night at 2100 Australian Eastern Standard Time, with a 0.25% expected leaving on hold. They will issue a short meetings minutes after that. Obviously, the members of the Bank of England will give their overall view, whether they're going to be hawkish or dovish. Hawkish meaning they're thinking about raising rates, or dovish being the opposite. We'll get a view of most members, of the 8 members comprising the Bank of England, to be able to give us some future direction on monetary policy. But that inflation data is pretty encouraging in terms of giving us some expectation of maybe the rates won't be left on hold at 0.25%. Maybe we're going to see some advance in that. We got the USD Consumer Price Index coming up as well at 2230 on Thursday. This is for the year-on-year August for Consumer Price Index, and also for the Index X Food and Energy year-on-year August result as well. We have advanced retail sales coming up for the US dollar, and we also have the University of Michigan Confidence coming up on midnight on Saturday as well. Broadly speaking, we have weakening data coming out of the US. Jobs numbers may have been, quite reasonable over the past, say, 2 announcements, but we did have the latest NFP result being worse than expected. If you marry that with sort of worrying inflation figures, and if you look to, sort of inflation not having been that crash hot over, the last few months, it places less urgency on the Fed to raise rates, and that really sort of destabilizes the US dollar generally when you get, Yellen and other Fed members being more dovish in their comments about the urgency of Fed rate increases. We've seen 2 already this year. We were waiting on the 3rd to occur by December, and that's been downgraded to around about a 40% chance of that happening. So, everything to do with that interest rate, either appreciation or depreciation, is very, very important when it comes to predicting for future currency movement. So we'll be watching that closely at 2230 tomorrow, and advanced retail sales as well. Okay, and obviously advanced retail sales indicates, the purchasing that's happening in the economy. The more purchasing that's happening, obviously that increases the likelihood that the prices are going to go up, inflation going up, giving a good indication for obviously interest rates to increase alongside to combat inflation and keep it within a healthy range. So we'll just take a quick look at the charts today. I go through a multitude of pairs, but I do go through the Aussie, the Euro and the Pound against the US dollar, the US dollar against the Yen. We have a look at gold, oil, the Pound against the Yen, and the SPI ASX 200. So just of note, you'll see just how rapidly currency can respond to an economic announcement, especially such as CPI. Let's just take a quick look at the 15-minute chart here on the, where are we here? Yep, there we are. So last night, bang on, as expected, 1830 hit, and then we had a massive spike in the pound against the US dollar. So investor confidence being renewed in a stronger pound because of higher inflation. Okay, so that just proves that such announcements really do have a powerful and long-lasting impact on the market. We've seen the pound rise steadily ever since in respect to that announcement. So we are expecting a further bullish pressure to ensue on the GBP USD today. We have targets on that particular pair to levels of 1.3340 and 1.33, sorry, correction. Got targets of 1.3340 and 1.3390 in extension. Going back to the AUD USD, got a pretty convincing top in the market on the AUD USD on the daily chart here, but we have short positions preferred to levels of 80 cents and 79.75 in extension. The euro has, again, long positions preferred against the weaker US dollar with targets of 1.2000 and 1.2030 in extension. We have short positions preferred. Sorry, we actually have bullish positions rather preferred on the USD JPY with targets of 110.40 and 110.90 in extension, at which time we're probably coming up to a daily top in the market and the resumption of the daily trend, but we've got the intraday preferences bullish. GBP JPY, obviously the pound being very strong at the moment, would be forecast to be stronger against the weaker yen. Targets of 147 and 147.80 preferred on long positions. Gold, we have levels of 1326 and 1323, short positions preferred in the market. Oil, due to abundant demand in the economy at the moment and supply issues from the hurricanes in the US that have ensued and cut supply, we do have a pretty convincing setup for a long position, the bias remaining bullish on both short-term and long-term timeframes. And we do have targets preferred at 48.65 and 48.85 in extension. And we have on the ASX short positions preferred with targets of 5735 and 5720 in extension. So traders, if you have any questions particularly about that, on any of the economic events discussed or any trading setups, anything to do with trading in general, please get in contact with your account manager here at ForexCT, and we'll be more than happy to assist you. But for the time being, thank you very much for your attendance. Look forward to seeing you tomorrow. Thank you.